All righty, welcome to Tom's Trade Rules. Rule number 2, never modify or break the trade rules during a trade. All right, let's get into that a little bit. In rule number 1, we did talk about the fact that you should plan your trade and trade your plan. So building a plan is key. Rule number 2 here, while it may seem totally easy to do, following your trade plan is not always that easy. So breaking your own personal trading rules while in the middle of a trade can have a lot of negative consequences that can impact your trading success. So let's look at a few things that happen when you break your trade rules in the middle of a trade. Number one, it's going to lead to a lack of discipline. So personal trading rules are established to maintain discipline and consistency in your trading approach. When you break your own rules, you undermine your discipline, and you might fall into a pattern of impulsive decision-making, which can lead to inconsistent results and definitely hinder your ability to achieve your goals. You got to follow the rules while in the trade. Doesn't mean you can't modify them later if you're finding that your trades aren't going as well as you had thought. Maybe your rules need to be modified, but we're not going to modify in the middle of a trade, because once you get used to that, you're going to start trading really undisciplined. Number 2, emotional decision-making. Personal trading rules are often designed to help you make logical and rational decisions, removing the influence of emotions. When you break your rules, emotions such as fear, greed, and frustration can cloud your judgment. Emotional decision-making can lead to poor trade execution and obviously suboptimal outcomes. You got to be careful not to fall into the trap of making emotional decisions and breaking your rules. Follow the rules, whether you like them or not. If you don't like them, evaluate and change them, as I said. Number 3, inconsistent performance. Personal trading rules are based on your trading strategy, your risk tolerance, and your personal income or your financial goals. So by breaking these rules, you deviate from your planned approach, making it difficult to evaluate the effectiveness of any strategy. Inconsistency in your trading performance can hinder your ability to identify patterns, adjust your approach, or improve your results over time. If you don't follow the plan, how are you going to know when to fix the plan when you don't follow it all of the time? Okay. I see this in many other areas of life, that people don't follow their plan. And then when you don't follow your plan, how are you going to modify it when you're always doing something different? So you got to stay consistent, good or bad. Then you can decide what's not working. Number 4, increased risk. Our trading rules include risk management guidelines such as position sizing, stop loss orders, risk reward ratios. When you disregard those rules, you're going to expose yourself to increased risk. This is going to lead to larger losses or a higher likelihood of blowing up your trading account, jeopardizing your overall trading capital. You have risk rules for a reason. Don't decide in the middle of a trade, you know what, I think I can let this go a little bit further. As soon as you do that is when you take a significant loss. Okay? Or just because you got it right once, that you let it go an extra 10, 20 points and it worked out and reversed, in your favor. Don't think that that's how it's going to happen every single time. Number 5, loss of trust and confidence. When you break your personal trading rules, you're going to erode trust in your own decision-making process. This loss of trust can have a significant impact on your confidence as a trader, making it harder for you to stick to your strategies and maintain a positive mindset. A lack of confidence can lead to hesitation, missed opportunities, and subpar performance. Traders who lack confidence in their plan or their trading will never be successful long-term. You've absolutely got to be confident in your plan, that it's the best plan you have and that you're going to stick to it no matter what. When you start breaking rules and you lose that trust and confidence in your own trading, okay, because things are just not working out, most likely it's you didn't follow your plan or you didn't have a good plan to begin with. But don't change the rule in the middle of the plan. Okay, evaluate your strategies one at a time. We're going to talk about that in another rule, that we track all of our strategies, we evaluate them over time. But you can't evaluate something over time when you're constantly changing the rules in the middle of the game. Okay, you got to stick to your rules no matter what during a trade. So to maximize your chances of success, it's critical for you to establish and adhere to your own personal trading rules. These rules should reflect your trading style, your risk tolerance, and your objectives. So by following your rules, you maintain discipline, you make rational decisions, and you create a framework for consistent performance and improvement in your trading journey. Hope you found this rule helpful. Again, don't modify or break your trade rules during a trade. There'll be plenty of time to evaluate your trades after you've got a good number of trades on down the road. All right, everybody, enjoy a great rest of your day, and we'll see you all